It's pretty cool, wasn't it?
He gave you way longer than me.
I know. You'll get more time in the future. Don't worry. I mean, you've been doing this, investing in Bitcoin infrastructure longer than me, so I'm gonna ask you, why did you get into it? I mean, you have a background in Fidelity, and this shouldn't be an interview, me interviewing you, but let's start a conversation from your perspective. Why did you decide to leave Fidelity and get into venture?
Yeah, I have questions for you as well.
Thank you.
This is going to be two ways. So I don't know how we follow Andrew Poelstra.
Yeah, right? Talk about building a cathedral.
So unlike Andrew, I'm hopeless when it comes to writing code. So I had to figure out, I knew around 2015 that I 100% wanted to dedicate my career to Bitcoin, but I didn't actually have any skills. So I had to figure out how to work for Bitcoin. And so I was totally stumped. And so I joined Fidelity, and they had a crypto group. And the group had been running for a while. They started a fund in 2017 focusing on just buying Bitcoin on the balance sheet and investing in various venture approaches. And then realized that there's an opportunity to be much more direct and to focus on financial infrastructure in the crypto space, not just Bitcoin, mind you. I know that's a little bit heresy, but I'm not going to sit here and claim that we exclusively invest in Bitcoin companies because, frankly, I think from a venture perspective, there's maybe not a sufficient supply of Bitcoin-only companies to invest in if you're deploying significant amount of capital. But I realized 2018 that I wanted to strike out and take a swing, and that's what we did with Castle Island.
Well, I joined 1031 because I would argue there that I think the opportunities to invest and deploy capital in companies dedicated to Bitcoin infrastructure is certainly widening, especially when you consider that this is a global phenomena and the needs are so pressing, right? Like the amount, like we discussed it earlier on the permissionless private key ownership, like just the UX around that, the industry around that, the companies like Unchained and Casa. They're incredible, but we need more of them, and we need them more widely dispersed. And I think from a venture perspective, the opportunity to help build out the infrastructure dedicated to Bitcoin and providing utility to Bitcoiners, leveraging the protocol, is massive. But we don't need to get into like Bitcoin only versus spreading against Bitcoin and crypto. But I think, what are the ways in which you look to, like, what areas of the Bitcoin infrastructure in your mind are desperately needing capital injections and build outs to provide more utility?
Yeah, I think generally speaking, like LPs are puzzled when you talk about investing in Bitcoin companies. So they're either like Bitcoiners, in which case they own Bitcoin, and then they feel weird about diversifying. And I don't know if you get this as well, but LPs will tell me, well, why would I invest in a fund or invest in startups that are building on Bitcoin? How can that possibly outperform Bitcoin itself? And to that I say, well, the law of large numbers applies. I mean, Bitcoin is worth like whatever it's worth, 600 billion or
775 according to Clark's dashboard yesterday.
All right. So it's already pretty large. So I think there's totally scope, even as a private individual outside of the fund conversation, to build a company, to angel invest in companies that are building on Bitcoin. Of course, those can outperform the underlying. I think that's not a question at all. But the space, there really aren't that many. There aren't that many pools of capital dedicated to Bitcoin. It's genuinely a shame. There's like a half dozen funds that I can think of, and then in the token space, like there's hundreds of funds that invest in tokens. Because investing in a Bitcoin company requires building a real company that has cash flows and a business model and revenue, and not just some contrived tokenomics. And that's just not popular in today's world of capital allocation in this like degraded late stage fiat era that we live in.
Is it a marshmallow test?
Yeah, because it's literally a time to liquidity. So it's like a time, that's what the marshmallow test is about, is restraint and waiting. In token land, your expected time to liquidity, if you're doing some sort of like token pre-sale, is like 12 months, 12 to 24 months. And LPs expect this, they understand this, they understand that the funds have high maturity, the funds themselves aren't even necessarily venture funds, they might be actually structured as hedge funds. Now in venture land, it's, you know, you're looking at a 10-year lock. I mean, it's just like a 10-year fund cycle. There's no redemption necessarily. And so that does equip you to invest in startups, but that's just not, that doesn't give you, you know, those super quick exits and super quick liquidity. So yeah, investing in Bitcoin startups, like, you have to be patient, but there's just not a lot of patience these days. And it's just a matter of like really, really warped incentives from both the LP perspective and then the GP perspective too.
Yeah. And I think at 1031, I think Grant, who's in the room right now, has written a very interesting piece on something that drives us when we're looking at investing in Bitcoin companies in the space is, are they really focusing on SATS flows? Like cash flow is something that's focused on in the fiat venture space, but we're very almost obsessive about really honing down with the companies that we invest in. What is your SATS flow strategy? How are you going to be bringing SATs onto your balance sheet and accumulating as much as possible, hopefully at a rate that ensures that our investment at the end of the day is going to outperform Bitcoin's performance over that time frame. And it's been a controversial thing to claim that you can try to do up to this point in Bitcoin's history. But I do think, again, going back to the fact that there is a massive amount of necessary utility that needs to be brought to market, that outperformance opportunity does exist in some areas of the market.
Yeah, and I didn't answer your question from before, actually, about, you know, where ought capital to be flowing. And it's funny to sort of like look at a market for capital and take a top-down view and say that there ought to be more deployed in certain sectors. Like, you know, that's like a little presumptuous, I guess. But, you know, one observation I would have is like, there's a bunch of publicly traded Bitcoin companies. They're all miners, right? There are publicly traded crypto companies like Coinbase, but that's obviously not really a Bitcoin company. How many miners are publicly traded in the US right now? Is it like 15, maybe 15 and 20? What's the total market cap of all the miners worldwide, public and private? Probably maybe 30 billion all told, something like that. The total market cap of the public miners in the US right now maybe is like 10, 15 billion if you add them all together. There's no publicly traded just Bitcoin companies that aren't engaged in mining, right? Unless I'm missing something.
Maybe Square Blocks.
Right. Yeah, that's probably the closest thing we have. So like the bulk of public markets financing, which is, you know, the cheapest kind of financing you get, arguably, is going to mining. And that's not a critique of mining. That's, you know, mining, you're selling $1 for 90 cents or whatever. And, you know, or the other way around. And so like the business model is very well understood and like, you know, investors get it and like it produces abundant cash flows and that's great. But I'm a little bit perplexed at sort of the lack of, you know, Bitcoin focused businesses which have to do with, you know, facilitating the usage of Bitcoin in commerce or anything like that, about, you know, capitalizing Bitcoin. And obviously there's lots of great startups that do that. And, you know, some of them are in this room. But I think that we still have a lot of work to do as it pertains to, you know, building out like Bitcoin as a key infrastructure for finance, you know, building like, you know, a free banking system with Bitcoin as the base collateral, for instance. So far, it's been a lot of brokerage-based and flow-based business models and custody-based business models. There's a lot of creativity there that hasn't been explored yet.
Yeah, I mean, there's so many areas that are going to emerge in the coming decade. Like hash rate markets is one that I think about a lot. It's going to be talked about mining, and that business is very straightforward. But another aspect of that business is very well known is they need better hedging strategies. The cost of capital to mine right now, as a miner, is extremely high compared to the other endeavors that you may embark in. I think there's really unique monetization models out there. Like, so for the podcast, like we host podcasts, we put it out there, and we can put a Lightning Network address into our RSS feeds and have Bitcoin streamed to us per minute listen per user if they want to. The way, so when I think about the media business that I own, like that's one way in which we monetize. And if we ever do go raise money, it's like that could be an incentive for a venture firm to get in with us. We have a SATS flow that is just passive from people listening to our product. You talk about coin joins, something like Samurai. It's something we're very passionate about at 1031. They have created a model that is working within a Bitcoin circular economy. It doesn't touch the fiat rails at all, and it's producing Sats flows that are very meaningful material. And so I think when we think about 1031, how are we investing in these companies? We're looking for companies that are thinking different and thinking in that the circular economy, like Bitcoin only, stack as many sats as possible mindset. Again, we do think there's ways to help these businesses out and participate from an equity perspective that we think will outpace the performance of Bitcoin.
So I guess I would ask you something. So there's like differences of opinion on this. So on the one hand, there's a camp of people that believe that we should just wait for Bitcoin to monetize and financialize and take over and be worth 10 trillion and flipping gold or whatever it is. And at that point, it's like, okay, it's time to kick off the Bitcoin transactional economy. And then anything done, any expenditure in Bitcoin before then is a waste because you're foregoing this immense opportunity cost. And then there's just the other school of thought that, okay, well, let's maybe start to utilize this thing a little bit, just demonstrate some utility. Let's kick off, some like Bitcoin expenditures, some Bitcoin denominated capital markets, things like that. I definitely have a perspective on that. Curious where you stand on the sort of like, let's go now versus like, let's wait another 10 years.
Yeah, I think it's like if you build it, they will come. So you need to go now in some perspective. Like what's happening in Latin America and Africa right now. Like there's startups out there are integral to adoption in their localities. Like without them being funded and providing on-ramps and custodial solutions for their local community, like there's a good argument to be made that Bitcoin wouldn't be adopted there. And since Bitcoin's a scarce asset, the more people adopt it and take some off the exchange flow, the higher the price is going to go. So like the more, and then again, like my buzzword of this talk is utility. The more utility you provide Bitcoiners, the more value is going to be driven to the underlying protocol because more people are able to use it. And I think you need to have companies build that utility.
Yeah, it's funny you mentioned that. I mean, if you look at the data, like Nigeria is like one of the top countries in the world in terms of Bitcoin penetration
Per capita.
Yeah, per capita, right. And I actually, like, for all their flaws, Chainalysis is good data on this, so I'll give them some credit. The other countries, I think if I look at their 2021 data, it's like Vietnam is up there, India is up there, Eastern Europe, Ukraine, I think is number 4, actually. Latin America, Colombia, places like that. So these are, mostly not like wealthy Western nations, but this is where you see the peer-to-peer activity. And by contrast, in the US and the West, we just have this very sort of custodial approach to Bitcoin. It's like heavily financialized, or there's all these apps that give you access to Bitcoin without ever, touching the Bitcoin, or, even the possibility to take ownership. And it's almost like if your context is you have weak property rights, weak governance, non-existent rule of law, banking sector that doesn't work, you're more inclined to actually utilize these things, engage in a peer-to-peer market transaction, and take ownership of it. Whereas we certainly have a significant amount of like crypto penetration here, but maybe less of an appreciation for the actual virtue of using the asset.
Yeah, and I guess that gets into the theme of what we came here to talk about, building a cathedral. And I asked that, and with our Western perspective, I don't like with the custodial solutions that you just mentioned and the sort of myopic, we're just trying to get rich quick mentality that is persistent here. Obviously, not everybody in this room or anybody in this room, I would argue, thinks that, but there are many in the West who are we're just going to get rich quick. But we are building a cathedral, whether you like it or not. And we can waste our time here in the West trying to get rich quick, but we really, again, have an opportunity to build out this network and this protocol so that it lasts far after we're gone, like Polstra just said.
Yeah, and I really have to commend anyone that is starting a Bitcoin business and avoids the siren song of token or building on one of these like sexy new blockchains with a $1 trillion ecosystem fund that will literally pay you to build your business on them, when you think about as an entrepreneur, like the portfolio of like things you have access to, the like carrots that are being dangled in front of you in terms of like where to build, they funnel you into like these alternative venues. They funnel you into the issuance of tokens. But the thing is, like 10 years from now, the enduring businesses will be the ones that are built in an honest way. Maybe they didn't even raise, venture financing. Maybe they're just completely bootstrapped. But it takes so much restraint to stare at that cornucopia and decide to just pursue sort of the orthodox model, building a real business with a product that users actually value.
Yeah. I mean, again, and that's maybe a commentary on modernity and the whole high time preference society that we live in. And I think it's really hard for people to get out of that high time preference mindset and really take a step back and say, all right, I'm going to think 10, 20, 30 years out. And then again, that's a 1031. That's what we name our funds as low time preference funds. And that's why we do that, is we want to basically communicate to the market that we have a very low time preference with this. We're willing to wait that out. But again, I guess talking about the cathedral that we're building, there's another cathedral being built that we're sort of up against, which is the regime, as it's sometimes called, the encroaching digital panopticon. This is the world of CBDCs that is becoming an ever looming specter over our lives. And I think it's important to highlight that we're up against this. There's another cathedral being built in parallel, and it's had a much longer head start, and we need to build ours in as quickly, as efficiently, and in a way that makes it as robust and ironclad as possible.
Yeah, and the cathedral you're referring to, that refers to the troika of the press, academia, and government, which all work in concert to, push effectively regime narratives. And it's so clear that this is a single entity that exists when it comes to Bitcoin, right? I mean, look at how academia colludes with the press to push anti-Bitcoin narratives. I see this on a first-hand basis. I'll see a paper published that says something critical about Bitcoin mining, despite being completely ignorant of how, Bitcoin mining actually works. It'll be written by some two-bit academic that's never, mined a Bitcoin in their life.
De
Vries, right? That probably works for the Dutch central bank. And it'll get picked up by the New York Times. I mean, basically by every single outlet. And then it'll get echoed by members of the government, of the US government. And so there's like a supply chain here. Academic, press, government. And then that informs policymaking, right? This is how it works. It's comical. No one ever reads the paper at the end of this whole thing. The paper is normally paywalled, so the press doesn't read it. So no one actually reads the underlying paper. Like, this is a great example. So there's this e-waste paper, but by De Vries, who works for the Dutch central bank, and it said, Bitcoin ASICs depreciate in 1.5 years. And on that basis, they posited that Bitcoin's generating X amount of e-waste because they believed that the ASICs are turning over every 16 months, actually. As Marty will tell you, that's not true.
Yeah, there's miners that came to market in late 2015 that are still hashing today.
But because they just picked this variable out of thin air, right, out of complete thin air, this assertion about like Bitcoin ASIC depreciation, they wrote a paper about that saying Bitcoin generates X amount of e-waste, and then that gets cited by the House Committee on Energy, right? And so you have assertion, press validation, government, and then potentially regulation, right? I mean, we haven't had it yet, but the EU, for instance, came very close to banning Bitcoin on the basis of the environmental concern. So it's just astonishing to see this in action, see the whole supply chain, but see that it's effective, right? And the only way to disrupt it is to, I guess, go to the source, to go to these papers and point out the inaccuracies. But I don't know how to. It's very powerful.
Well, don't want to pat our own backs here, but I think what you do with your platform, all the writing that you've done, what you do with your podcast on the brink, what we're doing at TFTC and in the newsletter, I do think it's having an impact. Like, I think and that's another thing I think Bitcoiners have realized, and it's something that's become very acutely obvious to me over the last 3 years as I've been interacting with the oil and gas industry more intimately. is Bitcoiners know how to own their own framing. Like everybody's shit on us for the last 13 years. And for some reason or another, over the last 5 years, it seems that a number of Bitcoiners have decided, all right, these people aren't portraying Bitcoin accurately. We might as well come out produce it. You're one of those people. Parker's one of those people. I'm one of those people. Matt's one of those people. And I think it is having a profound impact on the narrative. And what I'm trying to say here is like, this is part of the Cathedral. Not only are we building the protocol, but the messaging around it and the framing. We need to own the framing. This is something I've been going to the oil and gas industry and saying, you guys are bending the knee to capital providers who do not provide nearly as much utility as you do to the rest of the world. Energy is the basis of our modern society, and you provide modern society with everything, not only energy, but this microphone I'm speaking through right now. But some reason or another, you've allowed the capital allocators to make you bend the knee. Like, you need to begin owning your own frame. And I think the convergence of Bitcoin mining and the energy sector is beginning to embolden oil and gas folks to be like, you know what, we've got this Bitcoin thing now. We don't need to bend the knee to these capital allocators.
You know, the incredible thing is, and I'm sure you can attest to this, is there's a bunch of publicly traded energy firms that mine Bitcoin. They just don't admit it. So they all do it, but they don't want to admit it. ConocoPhillips, I think, was the first one to ever put out a press release saying, yeah, we have a partnership where we're mining Bitcoin. So you're an oil major. You're one of the most vilified companies on the planet. You're mining Bitcoin. And Bitcoin apparently is so toxic from a PR perspective that you're ashamed to admit that you're actively mining it to, you know, mitigate flares or improve the economics of some renewable assets you have in your fleet. That astonishes me, because it's like, wow, this is what they think of us. You know, we're worse than the oil and gas guys.
No, again, it's I mean, I guess as building a cathedral, if you want to visualize this as developers working on the protocol working and people in the mining industry working on building new ASICs and bringing it to market, I mean, again, controlling the narrative, because we understand this stuff better than anybody in the press or in academia and how they're portraying it. Like, we cannot let them put the narrative out for us. We need to control it. And I think when we talk about building a cathedral, it's part of it as well. So
speaking of narratives, I feel very strongly that something flipped in February of this year in terms of Bitcoin's legitimacy, because the competing protocol of the dollar, I think, lost legitimacy in a very material way.
I think Arthur Hayes said it perfectly.
Yeah. So Arthur Hayes, Luke Gromen, you know, never before had the U.S. frozen the reserves of a G20 nation. In 1956, I think they threatened to sanction the UK with the Suez Crisis, but they didn't. In this case, we're talking about $600 billion of reserves that were just frozen. Regardless of the morality of that action or how justified it was, that puts a gigantic hole in the dollar system, and it puts a hole in the dollar network. I feel very strongly that completely changed the game.
Yeah, it definitely did. I don't think people realize it either. I mean, the last month has, I mean, the dollar's status as the global reserve currency of the world, as the petrodollar / euro dollar reserve currency of the world, has ended. We think, like, it will be pinpointed years from now in history textbooks. They were like, it ended this week. And
yeah, August 15, 1971 to February 26, 2022.
Yes, and most of the world does not understand this yet, and it is a very heavy. It's a very heavy situation. Like, chaos comes after this to a certain extent. As Bitcoin, as we're building at this cathedral, I think it is imperative that we do it as quickly and as, not to say that we should do it quickly, move fast to break things, but we need to, there's going to be, it's heavy to say, but there's going to be a period of chaos. You're going to have crazy commodity prices, there's going to be food shortages, energy shortages, and we cannot begin to recalibrate society until we fix the money and create a pricing mechanism that people can actually meet around and begin rebuilding the economy from. And so,
but I think as American Bitcoiners, there's no need to despair whatsoever around the dollar maybe not being the global reserve.
No.
Because it hasn't worked for ordinary Americans. The cost of the global reserve was that you had to run enormous trade deficits, and in exchange for being the banker for the world, you offshored all of your industrial capacity. And so, like, it's worked very well if you were politically connected elite inside the Beltway, or you ran a fund, or you were a Cantillon insider of some sort, you worked in finance, it worked great. But for the vast majority of Americans, especially people who had blue-collar jobs, it's terrible. So now that we potentially eliminate this and go to a multipolar model or a commodity standard or something like the Bancor model, the U.S. will have the ability for the first time to re-onshore its industrial capacity. And this is where I see a conjugation with Bitcoin, because Bitcoin mining is on the vanguard of this, building out a high energy intensity set of energy campuses in the heartland of America, including Texas, of course. And that is being vilified by the government and the press. The fact that Bitcoin miners are building probably right now 30 to 40 gigawatts of new power installations on top of stranded energy assets, and building data centers, which could then be repurposed for other arbitrary types of compute. Bitcoin miners are vilified for this, despite the fact that they're on the vanguard of this industrial transition, which is going to help us re-onshore a manufacturing base.
Yeah, there's a bunch of Luddites out there trying to prevent us from actually making the world a better place, making energy markets more secure, making money better. It's weird. Again, we find ourselves in this weird period of time. We're at this inflection point. Most people going through the world do not recognize it. They do not understand it. And again, it's just trying to keep a level head, see where we're going, a world that lives on a sound digital monetary standard that's running on a peer-to-peer distributed network, and is very energy intensive. Again, it's counterintuitive. People don't like that it uses a lot of energy, but that's actually the whole point of it. And I guess maybe tying this back to the theme, building the cathedral, part of building the cathedral is having the focus to see the end goal and not let all the noise distract you or tear you down.
So I guess speaking of cathedrals, you recently joined the board of a firm called Cathedral, which is a Bitcoin miner. So tell us a little bit about what they do.
So Cathedral, we got Drew Armstrong, president, COO back there, raising his hand. He'll be up here later. I think Drew and AJ came out with their shareholder letter, 2021 shareholder letter a few weeks ago, and
it's very good.
Laid out the case for what they believe that we Cathedral believe that again, talking about the inflection point that we were born into and our moment in time. There's two schools of thought that are currently in direct opposition of each other. You have the Malthusian view, which is that humans are bad, we use too much energy, we're having too much kids, we don't deserve to live on this planet. They think there should be less of us. Our expansion and development of our economy is a zero to negative sum game. And then you have the Promethean view, which is humans are good. We have the intellect, the capacity, and the ability to build what we have here today, a flourishing society with the internet, with telecommunications, with Bitcoin. And we have the ability to harness energy to do positive sum things. And that energy usage isn't bad. Waste is bad. Being inefficient is bad, but that doesn't mean that energy use in and of itself is bad. I think people have this view that waste and inefficiency means all energy use is bad. The two ideas are separate. And so at Cathedra, what we're looking to do is to bring about a world of cheap, abundant energy and sound money in the digital age. And Bitcoin mining is the mechanism that allows us to do that.
Prometheans versus Malthusians. That's the battle of our current age.
Yeah. Are we out of time?
Just about.
We're going to win.